morning, everyone. My name is Alberto Zamudio. I'm a mortgage loan officer with Loan Depot. I'm located here in the San Francisco Bay Area, right next door to San Francisco in a city called Daly City. Fog City, as otherwise known, where the fog's always sitting on top of us. But been in the mortgage business for about 12 years. Spent quite a amount of time at Bank of America, then moved over to a few mortgage bankers. Currently, where I am now, Loan Depot, I've been here for about actually 3 years. This month will be 3 years. So I'm very excited to be here with you and share any information that I can provide. Um, my full-time job is I'm a father of two girls. I have a 12-year-old and 9-year-old. Also a loving wife. We just have a 1-year-old puppy as well too, so that keeps me busy. But yeah, that's definitely very fun to have. So thank you for having me. Really appreciate it.
Awesome. And you guys, just to thank you for coming here, Alberto. Definitely. And yes, the puppy is definitely part of the family. I know it firsthand as well. So it's like the new baby coming in. But I just want to talk about our Spire schedule. This was our past ones and our current ones that are actually coming up. If you missed any of these series, they're on Radius Academy. If you can't get access to that, reach out to your customer service manager and they'll definitely help you out in regards to that. Like I said before, we are working with the lender, with Alberto today. So thank you guys for showing up. Before I begin, I just want to give a shout out to all the Hispanic, Latino, Latinx people. It is Hispanic Heritage Month. We're kicking it off today. It will be for the next month. Although we're celebrating us in this month, we definitely want to celebrate all cultures throughout every day. So on behalf of Radius Agent, happy Hispanic Latin Heritage Month. And like I said before, it's no coincidence that two Latinos are actually doing this today. So welcome, you guys. So let's get right into it. You know, I think first and foremost, we want to make sure that we kind of just go over the basics. Like I said before, if you guys can, if everyone can just mute your background so we can just make sure everyone's clear and we can hear that, that'd be awesome. So let's talk about it. Alberto, what is a mortgage?
So a mortgage, let me just read what we have on the screen here. So a mortgage is a legal agreement between the buyer and the lender, which pledged the home as security for the loan. Pretty plain and simple. If your client does not have the cash to buy the home all cash, they're going to be obtaining financing, so which is called a mortgage. Basically, they're going to be taking out a loan to be able to buy the property, promising to be able to pay that mortgage back to the lender. So the lender in reality is also owner of the property. They will have a lien on title until the buyer pays that mortgage off, whether it be a refinance or they completely pay it off, they sell it. There will be a lien on title until that mortgage is paid. So pretty much that is what you would call a mortgage.
Right. And a mortgage too is something to leverage, right? Like even people that have the cash capabilities still wants to leverage a mortgage, right? As we hear before, cash is king. So why not leverage a 30-year amortized mortgage with a small payment instead of using all your capital? Exactly. So now in regards to mortgages, right, we have different types of mortgages. Can you explain a little bit about these mortgages right here?
Absolutely. Just what's here on the slide, you see we have VA, which is a veterans loan, VA. It's 100% financing, so it's definitely great for those deserving veterans who deserve this loan program. So it's 100% financing with no mortgage insurance. Typically, when you're not putting 20% down on uh, for a mortgage, you have to pay what's called mortgage insurance. But for our veteran clients, it is 100% financing with no mortgage. FHA is a Federal Housing Administration loan that's backed by the government. USDA is a agriculture loan for certain areas that fall into that category. Conventional is your traditional mortgage that lenders offer, and we'll talk a little bit more about these as well too. There's first-time buyer programs for those that are buying for the very first time. There's also new construction. I did notice uh, there are some loans that are not mentioned here. We do have the jumbo loans. We'll talk about that as well too. That's a certain loan amount over a certain amount. And then there's also private money, which is private lending. So for those that may not necessarily fall into these categories for one reason or another, maybe they just don't have the credit to qualify, they don't have the income to qualify. There are other options, there are alternative options, and that's private funding. Now, it does come at a cost, typically requires a little bit more of a down payment, a little bit of a higher interest rate, but that's one of the loans that are another option as well too.
Yeah, exactly. I'm glad you mentioned that because again, there is what's called traditional lending, which I believe is like you said, the VA, FHA, so on and so forth. But there's also what's called non-QM. That's called non-qualifying mortgages. And those type of mortgages are those for those that are self-employed, those that have a lot of assets but don't have a lot of income, right? I think a lot of self-employed people tend to write things off. So it'll look like they don't have that capital, but they may have it in the bank. So there's programs out there like bank statement programs as well. So I'm glad you cover all those loans. Now, in order to do that, right? Like we always talk about getting pre-approved, right? We're like, hey, get pre-approved, and we just send them to you guys, right? We're like, here, Alberto, get them pre-approved. But what does that really mean to actually get pre-approved? How do we go about getting a loan application and all that stuff?
Yeah, so once you've decided to connect your buyer with the lender, the first thing we want to do is we want to go ahead and do what's called an application. We want to, in other words, we want to do an interview. I always start off by either calling my client, or if the opportunity is there to meet in person. Just depends on the client and how they like to work best. But what we want to do first is get to know each other, so that way they can know me, know who I am, know who I work for, and so forth, to kind of start building that trust. The next step is once they decide that they want to move forward with the process, they have to complete an application. The application will give me everything that I need to know: where they live, where they work, their assets, the opportunities there to run the credit. So I'll be able to see their credit score as well too. So it just gives me all the information that I need so that I can start doing the calculations on seeing what they qualify for, which program meets best for them as well too. So that would be always the first step, is going through the application process.
Awesome. And then, we always hear the two words out there, right? Pre-qual and pre-approval, right? Some lenders say, hey, I'm going to give you a pre-qual letter. And some people say, hey, I want to give you a pre-approval letter. Give us a difference on what both of them are, because I know there is a huge difference in both of these.
Absolutely, yeah. So I always start off saying there's two ways of going about it. There's an informal and a formal process. The informal is the pre-qualification. It's just a very casual conversation, like I said, either over the phone or in person, where I just kind of get some information, what their income looks like, what their credit may be, if they've monitored their credit, what debts they may have, any car loans, any auto payments. So it's just very general. They're not providing any paperwork. We're not running credit. That's the main thing, is we're not running their credit report. A lot of people do not want to have a hard inquiry just yet. Maybe they're just starting off, trying to get an idea of what they qualify for, but they do not want their credit to be run. So that's the pre-qualification. Very informal. Like I said, just with some general information, I can tell them more or less what they would qualify for. That's the pre-qualification. Pre-approval is the formal process. They're ready to go. Their lease is coming due. They're ready to purchase. They're ready to go out, start looking for homes, but they need to be pre-approved. This is running their credit, filling out that application that we were talking about, running their credit report, and turning in any necessary income and asset documents. So now that I have the full file, we can do a pre-approval, meaning that not only will I let them know what they qualify for, I will turn in their file to our underwriters who are behind the scenes, who will confirm the pre-approval. So that loan is ready to go. They can now go start shopping for houses with confidence, knowing that their loan is ready to go. They have been pre-approved. All their income and asset documents have been reviewed. That's the pre-approval process.
I love that. Now, I know the talk sometimes with realtors are, I am not going to show these people until they're pre-approved, right? And definitely, I believe that's the fact. It's impossible really to kind of really show people what to do. However, a step towards the pre-approval process is the pre-qualification process. So if your person doesn't want to give up their social security number, their bank statement, so on and so forth, that's okay. You got to understand privacy is very important to these people right now. And I was, when I first got into real estate, it was explained like, when you go to the mall, Michael, you're looking for a shirt, right? Until you go to the store, you don't really know what shirt you want. After you go through a few stores, you finally say, okay, I want a blue shirt with a white pocket with the collar. And that's exactly how people go about buying a house. They are interested in buying the house, but sometimes being pressured and saying, hey, what's your social? Sometimes it pushes them away, wouldn't you say? And would you feel that maybe like the pre-qualification process is still a good process, maybe not good enough as a pre-approval, but still gets the person on the ball, would you say?
Absolutely. Yeah. It means that they still have that intent. They're wanting to get the ball rolling. They're definitely interested. They want to get some information first. Hey, can I even afford this? Is this something that we want to get into? So the intent is there. They're definitely motivated, but it just don't necessarily, maybe they're really particular about handling their credit and they just don't want that credit report run. But hey, maybe they want to provide their income documents. That's totally fine too. Again, it's still going to be considered a pre-qualification until we have the credit run and the credit report. It's still a pre-qualification because we can't base anything until we see exactly what their credit scores are, what debts they have. But at least they're getting the ball rolling. They're providing whatever information I'm asking of them, whether it be verbal. They more than anybody know what they have, what their income is like, what debts they have. But again, it gets the ball rolling, and the intent is there. So that way we can eventually lead over to the pre-approval, where we can have them fully pre-approved and ready to go.
Awesome. Now we got some questions here, so I'm just going to throw them at you. The first question is, does VA also include the closing cost?
So VA is 100% financing. Closing costs cannot be financed. It does have to be out of the borrower's pocket, or if there's going to be a seller credit. There's usually also what's called a funding fee for the veteran. Now that can be financed, but closing costs typically are paid directly from the buyer.
Awesome. And then we have some questions about private lending. I'll go ahead and take this question. It says, how flexible is private lending about DTI? Private lending is more interested on the house than it is the person at times. DTI tends to not look at the factor. They tend to look at the asset and where the ROI is on the property. The reason being is because they can foreclose and take the property. So they rather look at the property than the actual borrower. Would you say that's true, Alberto?
Absolutely, yeah. And like I mentioned, you're actually putting a little bit more down, so you have a little bit more invested in the property as well too. So yeah, exactly. They're looking more at the collateral, the actual property itself, and what the equity is in the property and so forth.
Awesome. And there was a question about list of documents. Nick, thank you so much for answering that question. So please, guys, copy and paste what Nick's answer is. And another question we have from Fidel is, how long is the pre-approval process? How good is the letter of the pre-approval good for?
A pre-approval is good for 90 days. That's how long a credit report is good for. So after 90 days, if for some reason they don't find a property, all we have to do to extend the pre-approval is run the credit again. So pre-approvals usually last for 90 days until we have to update the documents.
Awesome. So check it out, guys. So we just talked a little bit about that, right? What a mortgage is, the different types of mortgages, how to take a loan application and things are done, what a pre-qual is and what a pre-approval is. Now we're in escrow. So tell us a little bit about the loan process here and how we go about from being just a lead actually to now the loan process.
Yeah. So once you have the pre-approval, the credit has been run, the underwriters have reviewed and confirmed the loan. Now let's go shopping for the home. Now you can shop with confidence, knowing that that your loan is ready to go. Now, a good thing about our market right now is we're in a very competitive market. So we are competing against some cash offers. So that pre-approval, knowing that you are pre-approved, is just that much stronger because you can go in perhaps without a loan contingency. It just makes it that much more competitive against those cash offers that are coming through as well too. Of course, like Michael said, cash is king. But if you have these terms where you can go in with a shorter close because the loan's already been processed, it just makes your offer that much more competitive. But the first thing you want to do, so now you're out looking for a home, you identified a property, you submit the offer. You always want to make sure that the lender follows up the offer with the phone call to the listing agent. You want to follow up to let them know how good that this offer is. You want to reassure them of what has happened. It's a full pre-approval. They've been underwritten already and everything's ready to go. So you want to make sure that the lender follows up to give that reassurance.
Yeah, and I think that's super important. Yesterday, matter of fact, I was in contract and I actually got my offer accepted. So shout out to that. But, the lender sent the BombBomb video to the listing agent, right? And just said, hey, you know what? The client is great. Michael is great or whatnot. That actually got us the offer accepted. Literally, we were tied, with another person. And the person said, you know what, the way you guys just went about it, knowing that you called and your lender called, had me got so much confidence that this is going to go through correctly. So I love that you said that, right? Like, not only do we need to submit the offer as far as the real estate side, but it's always good to know that the lender has our back to ensure, because as you know, Alberto, right? Like on a 25-day escrow, what I have like maybe 7, and that's just me with inspections. But after that, that's all you, right?
Correct. Yeah, absolutely. Yes. You want to make sure that you have that communication. You all want to work as a team. You want to work with the sellers. You want to work with the buyers, the buyer agent. You're all a team. You all have that one common goal. So you want to make sure communication is very, very key. So you want to make sure that your lender has that communication, that they're open to calling the listing agent, making sure that they make themselves available. Absolutely.
Awesome. Okay, perfect. Then. So now we got pre-approved. we got the offer accepted. What happens now? So like for us, right, we're thinking inspections, we're thinking, all we do is call you up and say, can we waive our contingency? Can we waive our appraisal? Is it set, right? All you do is just get calls from us. But what is happening behind the scenes on your side? So like, what does it look like when now escrow is now accepted on your side of the business?
Got it. So once the escrow has been opened, hey, I get the call and say, hey, our offer got accepted. We're in contract. First thing I'm going to do is I'm going to request the title and escrow contact information. So I need to reach out to them to request all the buyer's escrow title fees. We need that so that we can provide the initial loan disclosures that we have to send to the buyers. In those disclosures will be the loan estimate, all the information regarding the fees, the interest rate, if it's locked or not locked, and all the other disclosures that are needed for us to be able to proceed to the next step. So first step is always obtaining the fees, emailing the initial disclosures to the buyer. All that pretty much happens within 24 hours of escrow being open. We want to make sure we move fast because in order for us to order the appraisal, if needed, we need a disclosure sign, which is called the intent to proceed. Now, I always tell my clients that because the signatures on these disclosures are electronic. It doesn't have to be a handwritten, it doesn't, sorry, wet signature, nor does it have to be in front of a notary. So they're not obligated to this loan just yet. It just allows us to continue moving forward with the process. The first step would be sending out the disclosures for them to review and sign. Once we have the intent to proceed, we can then obtain the credit card information because the appraisal has to be paid for upfront. There's a third-party company who provides the appraisal, and they usually require that the payment be paid for upfront. So that's usually happened within 24 hours. Getting the initial disclosures out, signing, ordering the appraisal.
Awesome.
Mhm.
I like that you said that, and I didn't mean to cut you off, but there are some out-of-pocket fees, right, for the buyer, right? So maybe you can talk a little bit about that. So when I speak about that, ladies and gentlemen, like what are out-of-pocket fees? Meaning, no matter what, if you cancel or if you go through, this is still going to be a cost to you. On the real estate side, we know that the out-of-pocket costs are the inspections, right? We have our property inspections, our pest inspections, so on and so forth. But what are what's called the out-of-pocket costs in regards to lending?
Yeah, so the main one is just pretty much the appraisal. The appraisal has to be paid for by because it's a third-party company that provides the appraisal, and they do request that the payment be paid for upfront. So that's really the only fee they're paying for on the lending side. We don't ask for a charge for a credit report or for the application. All that, there's no fee for that. The only fee they're paying for is for the appraisal when we start the process.
Awesome. So please include that into your buyer consultation as no. And that's something that I do. I say, hey, there's out-of-pocket costs and then there's closing costs. So basically what that is, what I always say, it's about $500 to $700 for the appraisal, depending on the rush fee or things of that magnitude. And then per inspection, again, it's another $500 to $700 depending on that. So if you get 4 inspections at $500, that's $2,000, right? And then in regards to the appraisal, that's $500. So they would spend about $2,500 just to see if they're going to buy this house. And if they do, awesome, that goes towards the closing costs. If they don't, that becomes their expense. So let's remember to say that. So I love that. We open up escrow here. We get all the fees. We send out the disclosure. We order the appraisal and we start working on the process. What happens next?
Yeah, so now that the process has started, the appraisal's been ordered, I'm going to be working with the buyer on any conditions that the underwriter has requested. Home insurance, if there's any other conditions that weren't worked on when we obtained the pre-approval, that might be maybe some updated pay stubs, maybe there's some letter of explanations regarding any credit inquiries on the credit report. So all those conditions are what we start working with the buyer. So that way we're ready to go. So when the appraisal comes in, that's pretty much the last item that needs to be reviewed, and we can request for a final review to obtain our clear to close. So during that time, there's going to be some downtime where the buyer doesn't really have to do a whole lot. They've already done everything with the application, ordering the appraisal, working with the condition, turning in the conditions. So now there's a little bit of downtime for them just waiting on the appraisal to come in and for that appraisal to be reviewed. Once everything is in and we're obtaining our clear to close, then that's pretty much it.
Awesome. So let's talk about this real quick. The last 5 days of the escrow, right? So when we as realtors say, hey, this is going to be a 30-day escrow, right? So the 30th day, you guys, is actually the day you record. Okay. So you go recording, you go funding, and you go signing. Can you talk a little bit about that, Alberto? What it is when you get your documents on how you sign, fund, and record, so people are aware of that process too.
Yeah, so like I mentioned, once we have all the conditions turned in, appraisal's been received, we request our final review. Underwriter reviews everything, checks everything off. There's nothing else left to turn in. Boom, clear to close. The file now moves to the closing department. Final loan documents are ordered. Now, the final loan documents are documents that have to be wet signed in front of a notary. So we'll arrange for the appointment for the buyer to sit down in front of a notary so they can sign their loan documents. We'll know what the final cash to close amount is, so that way they can either wire the funds to the escrow account or obtain a cashier's check. So that way they can hand it directly to the notary. So that way the notary can turn it into the escrow, to the title team. Once that's done, the title representative will review those final documents, return them back to the lender, so that way we can review, make sure that everything was signed correctly. The final fees were turned into the escrow company. Once we have everything ready, everything in for the file to close, then we are clear to close and the loan is closed. The wire of the money that's needed is sent to the escrow company, and we wait for them to do their recording.
Awesome. So just remember that, everyone, when your last 5 days should be focusing on signing, funding, and recording. And I always say that because if you sign on a Friday, obviously Saturday and Sunday is going to take some time. Monday, they have to review the documents. Tuesday, they're going to fund. Wednesday, they're going to record. On some occasions, you might have special recordings where you can fund and record on the same day, but just prepare that, right? So just remember that the last 5 days are basically the times to actually sign, fund, and record your loan. I'm going to pause for a second as we have a little bit more questions. Fidel asks, how much time do you need for a pre-approval? So the moment we giving you your documents, how soon can we know that this client is actually pre-approved?
So for me to tell you that this client is pre-approved, it'll take me just a few hours of obtaining all that information. That's my assessment. Once I do the calculations, run the run the credit report, and do all the electronic underwriting on my computer. So I can actually tell you how much your client is pre-approved for within the day, within a few hours. Now, the actual pre-approval from the underwriter can take anywhere from 2 to 3 days. So once I turn in that file for the underwriter to take a look at, for them to review, just to make sure that what I inputted in the computer is correct, that process takes about 2 to 3 days. But we have access, or I have access to what's called the automatic underwriting system in my computer. I can do the electronic underwrite, the same system the underwriters use to confirm that this client is pre-approved. So all that you can take, within a day to 1 day to 3 days.
Yeah. So know the difference, you guys, right? So there's a pre-qual and there's a pre-approval, and there's two components of a pre-approval: a loan officer's pre-approval and an underwriter's pre-approval, right? A loan officer basically verifies it through their system and their software. An underwriter actually verifies it manually. So they will actually go ahead and give the actual employer a call saying, hey, does this person actually work here? They'll actually put in a request to actually get your bank statements to verify that you actually have those money. So don't get me wrong, I love a loan officer pre-approval, but if you can, and if a company has the availability to give you what's called an underwriter pre-approval, that's called a TBD, right? Where all you have to do is just find the property. You don't have, that's a non-contingent offer right there. You don't have to worry about the actual income or the credit score. Just find the property as well. Okay, so the next question we have here from Fidel is, do you accept 2 or 3 buyers that a family is related? So I believe non-owner occupant buyers, I believe that's what he's talking about.
Absolutely. Yeah, absolutely. So if you have a couple that's looking to purchase and they alone do not qualify for a certain amount, they can absolutely obtain what's called a non-occupant co-borrower, where we can combine their income. We also have to combine their debts as well too. But if we can make it work with all of them to that loan amount that they're looking to obtain, we can definitely do that. Now, I do, let my clients know that just to be careful on that, because they can manipulate the system. They can qualify for a higher loan amount, but it's them who's going to be making those mortgage payments. So make sure that even though you qualify for this higher loan amount, that you can make those payments. Those other non-occupant co-borrowers are just there to help you to qualify, but they may not be contributing to the payment. Now, if they're coming in, you're all going to be living under the same roof and making the payments, and that's totally fine. But if you have somebody just there to help you to qualify, just make sure that you're able to make those payments that you're trying to apply for.
Awesome. Yeah, that makes total sense. Now the next question we had from Fidel is about the appraiser. So I'm gonna send that question to you as well. So it's like, can the appraiser from the same area do the subject property? So meaning like, I don't want to get an appraiser from Sacramento coming to the Bay Area, or a Bay Area appraiser going to Fresno, or so on and so forth. So how do appraisers manage their regions?
Yeah, absolutely. So what we do when we order an appraisal is we have a dedicated appraisal team, excuse me, an appraisal coordinator who sends out the request. They send it to an appraisal management company within that area. So they send the order to a few different appraisers to see who can accept the order first, who has enough time to be able to do so. But it's all within that area. We're definitely not going to order an appraiser from Los Angeles to appraise a house here in San Francisco. So it's definitely going to be in the area. It will go out to a multiple amount of appraisers, so that way we can make sure that we get someone out there really quick. Right now, appraisers are in demand, so appraisals are taking a little bit longer time, but we are sending the request to appraisers within the area. Absolutely.
Yeah, and to break this down, so in our previous life, before we all got regulated here into this new lending world, we used to be able to choose our appraiser. We used to be able to have one appraiser and say, hey, go to this house, so on and so forth. But that was taken advantage. And that's what happened in this market. And that's why the house of cards fell down. When we got regulated, what happened was they formed what's called an AMC, an appraisal management company. And each of the lenders that you work with are attached to different AMCs. And what they do is they actually put in a request to the AMC manager, right? That then goes out to a couple of appraisers within that area, kind of like Uber, right? Say, hey, there's an appraisal available in Vallejo, so on and so forth. A local appraiser that meets those criteria, and again, I don't want to go into detail, but I believe it's like they have to live within 50 miles of the property. They have to have done this, so on and so forth. Will then take that appraiser and say, okay, I'll go out there and do it. But I do believe, and I do know for a fact that because of what happened in the past, we have to use local appraisers right now. So awesome. Thank you for covering that as well. So what is this? I see a digital mortgage application. We're a virtual company, so we love everything digital technology. We just adore that kind of stuff. So tell us about this digital mortgage application.
Yeah, this is amazing. So again, once we're in contact with the client and they want to go through the mortgage application process, I always send them this link. It's a online application link for them to be able to go in at their leisure, start filling out their information. So it's all digital, meaning that in that application, if their employer, depending on who their payroll is with their employer, we can actually digitally verify their income. We can also digitally verify their assets. So when they're done with that application, I may not need to request any documents. They don't have to turn in pay stubs. They don't have to turn in W-2s. They don't have to turn in bank statements. We're ready to go. So we have this system in place where we can pull their information digitally, all their income, all their asset information. Makes it very streamlined, very easy for the buyer. They're not there having to gather and make copies of their W-2s and pay stubs and bank statements and send it over, depending on how much time that may take. Everything is ready to go once they fill out this digital mortgage application.
Yeah, I love Loan Depot. I love when you guys hit the market. You guys came out very, very tech first, where a lot of other companies are trying to like start that way or change their method of how they're doing their business. And you guys came out firing all cylinders. So what do we have here? What is this direct to underwriting pre-approvals we got here?
Yeah, so again, what I was saying, so once we have the application filled out, credit is run, their file is sent automatically to our underwriting department. Now, talking about tech, we have now our computer system that will actually give a underwriting approval. So an actual underwriter doesn't even have to actually review it. It's already in the system where they can review it. What we were talking about, that automated underwriting system, but it's a direct underwriting pre-approval where their pre-approval is ready to go from our system that we have in place. So that way it eliminates so much time. That way their pre-approval is ready to go. Maybe they saw a house on the weekend and they haven't gone through the process yet. If they do this all within one day, we can have their approval done in one day as well too through this system.
I love how you said computer system, dude. We're so old school, man. Awesome. And so now that we have that, right, we have the digital application, we have the digital underwriting. You have a customer portal, it seems like.
Yeah. So this portal is great because again, if they don't want to, if there's any documents that are needed, They don't have to send it to me through email where, it could get lost somewhere. They can go directly into the portal. They're going to have a link where it securely gets uploaded into the portal. Our realtor partners have access to it as well too, not to their documents, but to the process of where we are. Has it been underwritten? Has it been approved? Are the conditions turned in? So you'll be able to see all the steps of the loan to see where we are. That way you're not just taking my word for it, but you can actually go into the portal to see exactly where we are in the process.
I love this because here at Radius, we do leads, right? And we're all of us, we have online leads available. And those individuals that request information from a realtor online, they're already thinking technology. They're already on a digital platform. And, you always want to compliment, you guys, your business with somebody that's doing the same thing that you're doing here. To have someone that has a digital platform, when we have a digital platform, it's going to complement each other's business. I'm not saying, doing the paper is bad, but at the same time, I love this whole technology part about all this stuff. So it works out really well. Now, let's talk a little bit more about loans in different areas. Now, we know that not all loan amounts are alike, right? Not all cities are the same or whatnot. And for each city out here, we have different loan amounts. So tell us a little bit about why the difference here on loan amounts versus one county to another.
Yeah. So as you can see here from that website, you have all the different counties here in California and what their loan amounts are for what's called conforming. Now, conforming is any loan that conforms to Fannie Mae and Freddie Mac guidelines. As you can see, Alameda is a high cost area. That conforming loan amount for one unit is $822,375. Again, it's a high cost area here in the Bay Area, as opposed to Alpine County. That county for one unit, the maximum conforming loan amount is $548,250.
Wow.
As you go down, El Dorado, 598,000. So you can go down this list to see the different loan amounts. It also has what the conforming loan amounts are for 1 to 4 units. 4 units in Orange County is what was it, 1,054, I believe. Yeah, 1,581,750. So you can buy a 4-unit property under the conforming guidelines for a 4-unit property in Orange County.
I remember when I first started, I'm going to date myself. The conforming loan limits, guys, was 417. Yeah. Remember that? Yeah. It was literally 417 for Alameda County for 1 unit. Anything above 417 was basically non-conforming or whatnot. So go check this. Definitely each county is different. The good thing about Radius, we're all over the place in California. So please come check this when you're going to different ones, especially if you're using FHA, conforming or things like that. This is really, really going to matter here.
Yeah, the reason why that's so important is because depending on the area that you're in, if you see that your client's financing is going to be over that conforming loan amount, well, now that's going to be considered a jumbo loan. And jumbo loan guidelines are different than conforming loans. Require a higher down payment, higher credit scores, reserves, whatever it may be. There's different qualifications for conforming and jumbo loan amounts. So that's very key that you know what the limits are in each county.
And to make it basic, you guys think about it this: the more money you get, the more risk it's going to be for the lender, the more things are going to tighten up a little bit, right? That's basically what it is. Like we're going to give you $1 million. We're going to want a DTI, which is called debt to income ratio of about 35%, right? We're going to give you 300 grand. We can probably stretch that up to 300,000. I mean, 50% DTI with FHA. So always check that out. So these are loan limits. Now I want to talk a little bit about down payment assistance. And I love that you have this here. So can you tell us about Cal HFA, GSA, all these different down payment assistance programs that are available for homeowners?
Yeah, absolutely. These are 2 of the most commonly used down payment assistance programs here in the state of California. You have the Cal HFA, which is the California Housing Finance Authority, and the GSFA, which is the Golden State Finance Authority. So if somebody's looking to buy a home, but they just don't have the money available for the down payment and closing costs, these 2 organizations are there to be able to provide assistance for those funds. Now, the difference between the 2, I love the Golden State Finance Authority program because there's a program there where if you have the loan for at least 3 years, you do not have to pay it back. It's a total gift. Whereas Cal HFA, typically you have to pay that back at some point, whether you either refinance the loan and pay that money that you use back, or if you sell the property. But Cal HFA also allows both programs allow for assistance for the down payment and closing costs. So once you're working with the lender will be able to give you more information and kind of determine which of the two programs is best for the client. Now, the rates are a little bit different compared to when you're using the traditional loans or your own funds, but it's a great program for somebody who's looking to buy and just having a little bit of hard time saving up that money for that down payment and closing costs. These are great alternatives.
Yeah, awesome. And I just said in the chat, you guys, sorry, I was clicking around or whatnot. Different training program that you guys can take within CalHFA and GSA. Highly recommend that you do that. This can get a lot of people in. I was able to get somebody in recently with only $3,500, and they got like close to 30K worth of closing costs and things of that magnitude. So down payment assistance, really use it, take advantage of it. Also, too, Alberto, on top of that, there's local down payment assistance program, right? Like in the East Bay, we have like something of that magnitude called MAP, correct?
Correct. Yeah, there's definitely in the more local scale, there's different counties that offer assistance as well too. If you live in the county or work in the county, whatever it may be. So again, that's something that you want to have your lender research and review for you. Now, not all lenders are approved with these different programs as well too. So you want to make sure that your lender is approved with the county for that particular program. These are a little bit more of the larger scale county program. I'm sorry, state programs, but there are county programs as well.
Habla español, Alberto.
See?
There you go, Fidel. Yes, he does speak Spanish. Awesome. So talk about a little bit about this product suite. I mean, we talked about all the different loans, but now that we had mentioned that, we also have what's called foreign nationals and ITIN loans, right? I know you talked a little bit about that. Can you tell us a little bit about the foreign nationals ITIN? As you know, the Bay Area, we get a lot of people working here with working visas. We're home to tech with Google and Apple. So we have tons of people coming from different countries and they can buy, right? So can you talk a little bit about the foreign nationals and the ITIN loans?
Absolutely. Yeah. Just before I forget on that last slide, Michael, just wanted to let you know if first-time buyers is your niche and you want to use down payment assistance, there's links there for you to be able to customize some flyers with your information on there as well too. So if you want to market to first-time buyers or somebody who's going to be using down payment assistance, you can go in and actually go to those websites, go to those links, and add your information, and you'll be able to customize some flyers with your personal information.
Here's that link he was talking about, you guys. So I'm going to go ahead and put it in the chat, but look at all this stuff. These are all different flyers that you can send out to your database. This is awesome. Thanks for showing that.
Absolutely. Yeah. So going back to the question regarding our products, foreign nationals, with all honesty, I haven't really used as much. They don't really come my way as much, but being Latino, I get ITIN loans all the time. Basically what ITIN loans are people who are here without a social security. There's no social security, but they have an ITIN number for them to be able to file their taxes. So the ITIN is an ITIN. So we do have programs for those clients who are not, residents, not citizens, not permanent residents, but they do have an ITIN number. They can go ahead and apply for a loan. There's a little bit more money that they have to put up front. It's typically 10% down, but they can obtain a loan. So they can buy a house here in this area with just only an ITIN. Foreign nationals, same thing. We have those that are same thing. They're not citizens, whatever it may be. We have loans for them as well too. Now these loans are what's considered that non-QM. They're non-qualified mortgages. They're not your traditional standard loans that are given to just anybody. They do require a little bit more. Rates are a little bit higher as well too, but we do have loans pretty much for everybody.
I like it. When I was doing ITIN back in the days, it was like 35% down. So now we're doing ITINs at 10% down.
We do, yeah.
That's huge.
We have an investor who will go up to 400,000 with 10% down. Anything above 400,000 would be 50% down. But yeah, the down payment has definitely come down a bit.
And that's great, and I know your niche, you guys. I mean, every loan program here is going to match your market, right? I was talking to someone else that's just joining Radius here, and I was like, you know what? Your market is USDA. She was like, yeah, I love that. You know your products, right? For example, here in the Bay Area and probably in LA, jumbo loans, right? We're kind of subjected to jumbo loans, right? 2-bedroom, 1-bath in the Bay Area is going for 1.1 million. That's kind of how it is. So I would say, look at these products and definitely know that. Another question from Fidel is, are you available after to pre-qualify one of his clients?
Absolutely.
Awesome. So tell us a little bit about this. I know we talked about all these different products, but what is Home Possible?
Yeah, Home Possible is a program that we have for a conventional loan for conforming loan amounts with a minimum down payment of 3% down. So it's basically just a program that we have. It's a conventional loan program for purchases, one unit, what is it? One unit primary residence. There are mortgage insurance, which are a little bit less uh, per month, and flexible credit terms. So it's a great program for a first-time buyer, somebody who's coming in with little down. They could put as little as 3% down under this program.
And I think why this is important versus your FHA is because of the guidelines, right? FHA requires certain things for the house to have done in order to do this. Now you can switch it over to something like this and not have to be subjected to the FHA guidelines. Is that correct?
Correct. Yeah. Yeah. So again, there's different guidelines between conventional and FHA. FHA requires a minimum of 3.5% down. They do allow for a little bit higher debt to income ratio, but the biggest difference between the conventional home possible mortgage and the FHA is FHA requires an upfront mortgage insurance premium. It's a 1.75% of the loan amount. Now, it doesn't have to be paid for out of pocket. It can be financed into the loan, but it's an additional fee that FHA requires to be able to obtain that loan. Here on Home Possible, on a conventional, they don't require that upfront mortgage insurance. So it's a little bit less costlier loan.
And then Rafa is asking us, is for Homes Possible and Home Ready, don't we have to check income limits first? So is it also income limits as well?
That is correct. Yeah, there's definitely income limits to be able to qualify for this program. Yeah.
Oh, I wasn't sorry, you guys. I was talking and I was muted and I apologize. What I was saying was that the jumbo loans are great, but I really want to get into these renovation loans because there are properties there that kind of need a little bit of updating, right? A little bit of golden touch or things of that magnitude. And these products here help us find that property where we can actually get our buyers in that property and give them money to actually fix up that property as well.
That's correct. Yeah. So we have these great renovation programs. So if you're buying a home that needs some work, fixer uppers, whatever it may be, there's a limited 203K, which is up to $35,000 in work. And then there's a standard, which is 35,000 and above. So if you have a property that somebody's looking to buy, maybe the appraisal comes back and is subject to certain repairs. Sellers may not necessarily want to do those repairs. So you can apply for a renovation loan and get it done, and we can finance the renovations that need to be done. Again, there's different ones, different renovation loans depending on the amount that needs to be financed. Up to 35,000 is just, it's a limited 203, I'm sorry, a limited renovation loan. And then anything above 35,000, if it's some more work that has to be done, then it's just your standard. But yeah, we definitely have renovation loans to be able to do some fixing of the property.
Awesome. Now, what is Fannie Mae Home Style?
So Fannie Mae Home Style, you have anywhere, the Home Style, the Home Ready, they're all kind of just different names, but it just depends. There's 5% down on a 1 unit purchase. Properties 1 to 4, credit score 620. That's usually your traditional Fannie Mae loan that we have available for conventional loans.
And this is the difference here between the FHA 203K and the
Yeah,
Fannie Mae Home Style?
Exactly. I'm sorry. The Home Style was for the renovation loans. I'm sorry. The 203K is your FHA renovation loan, and the Fannie Mae Home Style is your conventional renovation loan.
I got a great question here for you. Is there any 40-year term loans?
Right now, Loan Depot, we do not have any 40-year terms. There was 40-year term loans, but we do not have it right now. It's something that I think went away. I believe it was during COVID. A lot of loans were suspended and taken away. We did have an investor who offered a 40-year interest only loan, but as of right now, it has not come back. So we do not have a 40-year loan.
Yeah, I remember 40-year loans back in the days. They were pretty popular. I mean, like they were definitely good ones.
Yeah,
Now,
yeah.
also,
I mean, it just allows you to stretch it out for a little bit longer.
and it seems like here too, even with VA in regards to the 100% financing, we have some renovation loans availability for our veterans as well.
Absolutely, yeah. Like I said, the renovation loan, you have it in the FHA format, you have it in the conventional, and we have it for the VA as well too. And VA, like I mentioned, is a great loan for our veteran partners because it offers 100% financing. Again, no mortgage insurance, so it's well deserved and it's something that we definitely probably offer.
Awesome. Now we talked a little bit about the consumer side of things, right? On like why a consumer should work with Loan Depot and all these great products or whatnot. But how do we, as realtors, partner with Loan Depot, right? So your next slide is why should we choose to work with Loan Depot or whatnot? So I'd love to talk a little bit about that.
Yeah, absolutely. So, what I always tell my clients, on top of all the great tools that we have, I always feel it's best that you also build that rapport with the lender. It's very important that you have that rapport, you have that trust with the loan officer that you're going to be working with. It's great that we have all these tools behind me that I have available to offer you, but I always want to build that trust with my clients. So that way, you're comfortable working with me, and I'm also comfortable working with you as well too. But again, going back to the digital format that we have, where we can pretty much move everything very quickly without a lot of documents, the marketing that we have, the applications that we have for your clients. If you're looking to move very fast, we have the tools in place to be able to offer that pre-approval instantly or within the day. So there's a lot of great tools that we have available for your clients, for you and your clients.
Yeah, now I see here you Mellow Marketing. So I take this is for us, right? So we can co-brand with you in regards to websites. I love the fact that you said consolidate your leads and track lead activity. Can you talk a little bit about that?
Absolutely. We use a CRM platform called Total Expert. And
Yeah, I already had my interview, so I'm a little confused why. I think from
sorry. So we have a CRM platform that is called Total Expert that we're allowed to co-brand with our realtor partners. Now in Total Expert, we're able to generate single property websites. So if you have a listing that's coming to the market, we're able to customize a website for you. We're able to market it, to send it out for marketing, open house automation. So if you have an open house, we're able to track all the leads that come in. You can have the client sign in, and it'll be your CRM available for you to go in and see what clients came in. A lot of great tools. If that's something that you're interested, let me know, and I'll be more than happy to send you the link to get signed up on Total Marketing.
But not only that, you guys do a lot of training. I think every day from you have a weekly training going on with yourself, correct?
Every day we have training. Yeah.
Awesome. And then also, I remember before COVID, you used to have the great in-person events. You guys used to bring out like Barry Habib. And Barry Habib, if you guys don't know Barry Habib, Mortgage MBS Highway is actually really good. So yeah, Loan Depot definitely, bar none, has some great training, some great marketing tools for the realtors. And definitely, I would love for you to reach out to him or whatnot. But definitely tell us a little bit more about this. I mean, you just talked a little bit about all this fun stuff here, but I want to start opening it up to questions here. Like, let's start getting into Alberto's brain here a little bit more and talk a little bit about that. I got one question for you. Where do you feel the market is going here in 2022? Where do you feel rates are going to be? Do you feel that they're ticking up a little bit? What is your thoughts on that?
Rates for me, in my personal opinion, they're going to remain stable. We're still in this pandemic. There's still people who aren't working. Right now, in order for this economy to keep moving and to continue to improve, rates have to stay low. Eventually, they are going to start ticking up. But man, you're talking about rates at 3%, 3.25%, jumbo rates, 2.75%. That's unbelievable. Those are still historical low rates. So for the time being, from one day to another, they're not going to jump from 3% to 5%. Your buyers are in a good position right now to have a good rate from here another year or two. I mean, the rates are going to continue to stay low, pretty much free money. So I would definitely, encourage your buyer, anybody who's on the fence, don't have them wait. Let them know right now is better time than any time to go through this process.
Yeah, when somebody asks me that, like, hey, it's a good time to buy, my response always is for who, right? Because all of us are at different stages of our life, right? Some may have that ability to buy. I remember when I started doing loans back in the days, and I keep saying back in the days, I was like 18 years ago, rates were 8.25%. 8.25%, right? That's where rates were. The lowest rate I sold when the market changed, I think was like 1.99. Where are rates right? I know you can't quote and we won't hold you to it, but where are you seeing rates bouncing around at currently?
Yeah, right now for conforming rates, like I mentioned, they're anywhere between 2.875 to 3.25, somewhere, just depending on credit. If it's a cash out, if it's a refinance rate in term, or if it's a purchase, they're definitely the higher upper twos, lower threes. Jumbos I've been seeing a lot in the upper twos, so they're still great around that range right there, anywhere from 2.75 to 3.2.
And if you think about that, right before COVID, I saw rates going up to about 4.5, right? 4.5 is where I saw rates being, and that's when the market was kind of going like this. So anytime you look at housing, also look at rates. Rates are going to determine housing, right? The affordability of that. And also too, just make sure that your client also gets pre-approved every 60 days or so. if their max pre-approval is 600,000 at a 2.75, and that rate now is 3%, they can't buy that house at that price anymore. It actually changes. So that's why it's very important to also be in touch with your lenders in regards to rates and things of that magnitude. But yeah, so I'm glad that you said that as well. Any other gem that you can tell us in regards to like helping the offer get pre-approved or things that we should look at in the market right now?
Yeah, no, I mean, I would say definitely work with your lender. Make sure that you have that communication with the lender, so that way everybody's on the same page. You want to make sure that your buyer feels comfortable with the terms that they've been given. You want to make sure that your lender communicates and listens exactly to the needs of the buyer, so that way we're setting them up with the proper loan program that fits their needs.
I like that you said that. So another question we have, what is the lowest FICO score right now that could be used?
Lowest FICO score right now is for our FHA product, which goes down to 520
Mm-hmm.
for
Wow.
FHA. 520, yeah.
Yeah.
Conforming, it's 620, but for FHA, we'll go down to 520. Now, you have to be careful though. You know, when this credit score is at 520, there's usually some issues with that. So even though their score is at 520, there may be collections on the credit report. Usually, sometimes those collections have to be paid for as well too. So not just because they qualify for the loan at 520 means that they'll be able to obtain it, but we do allow a loan as low as 520.
I like that you said that. And sometimes I think we tend to forget that. Don't forget, in regards to the pre-approval, if you have someone that has a 700 FICO score and they have everything else, there's also judgments that take place. There's also child support that takes place. There's also some other things that also take place about that. Now that you mentioned that, can you touch a little bit about that in regards to, you know, the child support and also maybe student loans as well?
Yeah, student loans. So student loans right now, there's a lot of student loans that are in deferment. Now, even though they're being deferred, we still have to use a payment, a payment against the client. So if there's no payment on the credit report, we may have to use 1% of the loan balance as a payment. So again, that's something that the lender will analyze once we see their credit report. Child support, same thing. We want to use the child support payments against them, against their debt to income ratio. All these debts we have to look at and take into account. Child support, judgments, any tax liens, those have to be paid for before we can close. Some collections, if they're under $2,000, may not necessarily need to be paid, but again, it's just a case by case. Once we go over all the credit report and all the information, your lender will be able to tell you, or we'll be able to communicate with the buyer what needs to be paid, if anything at all.
Another question we have here, are there options for scores down to 350? Wow.
Maybe private lending.
Private lending.
Maybe private lending, yeah. But again, you know, I would definitely, you know, Loan Depot, we don't have anything as low as 350, but you know, maybe private lending. But even then, they're definitely going to look at the issues of why the credit score is that low. You know, if they're not able to maintain their credit, if there's certain issues, you know, then that lender may not necessarily want to give them that loan.
Oh, you're getting drilled right now, Alberto. Here's another one for you, man. What happens if there are multiple mortgage lates and some blemishes on their credit due to the lates?
Mortgage lates will usually disqualify you from being able to take a mortgage. Within a year, we only want to see one 30-day late, and it cannot be within the past 6 months of obtaining that mortgage. If you have a mortgage late, maybe 9 months ago, 10 months ago, we still may be okay, but within 1 year, we only allow one mortgage late, and it cannot be within the 6 months of obtaining the mortgage that you're applying for.
Awesome. Well, thank you guys for attending today. If there's any more questions, please put them in the chat. We will have this PowerPoint slide given to you guys as well as far as this recording in Academy. And yes, we'll definitely give out Alberto's information too. So I'll make sure, Fidel, I'll make sure I connect you personally myself with Alberto today. Fidel's out in San Mateo, so you guys are in the same arena as well. So that's actually really good. But if there's any other questions out there for anybody, we'll give it a couple more seconds. All right. Well, Alberto, any last words of wisdom from us?
Hey, I just want to thank you all for giving me the opportunity to be here. I'm definitely here to help you as well. And not only just for your clients, but you as well. Again, we have a lot of marketing tools available to help you succeed as well too. And that's always what I propose, to be able to be a partner, not just somebody who's going to be taking your leads, but to be there in any way that I can to help you build your business as well too.
Awesome. Well, thank you guys for attending today, Aspire Training. If you have any questions, please reach out to us. We'd love to help you out. Alberto is here along with a number of other lenders that we partner with. So you guys stay blessed today. Peace, love, and real estate. And we'll talk to you guys.